stock market today analysis for November 25th, 2022. We're still recovering from the holiday of Thanksgiving. Had a half day of trading today. That left the S&P 500 down 0.03%. Nasdaq down 0.52%. Crude oil down 2.13%. Gold up 0.48%. 10-year treasury down 0.40%, and Bitcoin up 0.85%. Earnings. There was no earnings yesterday. We had, what is that, a total of 4 earnings report today. Next week is going to be pretty light. Looks like 40, a little over 41, 42, 43, 44 at the, okay, so I guess it's, pardon me, 41 total. You can check out StockTwits. You can check out Yahoo Finance. You can check out a variety of different places, but if you do a type of trading or investing that you need to be on top of the earnings, then do what you need to do to be on top of those earnings. There's some type of trades that I do that I'm 100% on top of the earnings. There's other type of investments I have that I just don't care. I'm holding these stocks no matter what they do during earnings. So it depends on you, your style, and what you need to do. We had the MMRI drop even more today to close out at 243.1. The VIX still down here in that low 20s at 20.5 today. Now here is a link to a video at 2 minutes and 5 seconds of this video. You can come back and watch it later so you can see what I'm talking about here with this test that I'm doing in the simulated trading account. It is a volatility trade based on the VIX. Basically, when the VIX is in this low area, we sell calls, and then as the VIX rises up, we close those calls out, or at some other time, close them out, whatever. But at some point, close those calls out, and the VIX rises up, then we sell puts. So right now, I have one on Apple. These are basically all long-term trades. Like this one on Apple is 17 January 2025, $180 strike price for the call. And right now, I wish I could get rid of this column. I haven't figured out how to yet. But profit and loss since total open, it's up 130 bucks. Amazon got the 190 call for January 2025. Right now it's up 7 bucks. Citibank, 17 January 2025, $75 call. Right now it is up $31.50. Coinbase, this was a straight put purchase, just to test out to see if Coinbase is gonna be dropping. It did drop a bit already, so it might have been a little bit late to the game, but that's all right. It's a simulated trade. That's how we learn. And right now it's down $55. Intel, January 19, 2024, 70 call sold, and right now it is in the negative by 50 cents. And Microsoft, 17 January 2025, $340 call sold, and right now it is in the negative by $22.50. Netflix, January 17, 2025, $550 call sold, and right now it is profitable by $72.50. Nvidia, 21 June 2024, $325 call sold. Right now it is negative $47.50. SoFi, January 19th, 2024, $30 call sold, and right now it is profitable by 50 cents. SPX, now this one it's been interesting to say the least. This is a credit spread, a call credit spread. expiration date 19 January 2024. Sold the 4600 strike, bought the 4800 strike call for protection, and looks like I'm down about 150, 170 bucks, somewhere in there. SPY has nothing to do with this. I thought I had nothing to do with it. What's going on with this? I thought I had nothing to do with this. What is? I have no. I've totally forgot whatever I'm doing over here. I don't know. I know it doesn't have anything to do with this little thing. This is what I do in my simulated trading account. I test things out, and which at the end of this video I'm going to recommend you do the same thing. You test out stuff for yourself. Tesla got the January 17th 2025 $400 call, sold, and right now it's in the negative by $402.50. This is my first time testing out this strategy, this volatility strategy. So I just put it on a little bit recklessly, and plus I wanted to put on about 10 or 11. If I was doing a real trade, I probably would. As I'm moving into doing a real trade, I start out testing like this. I see, you know, which stocks seem to fit best into my personality, which ones I like, which ones, you know, being profitable for me, and then I'd probably narrow it down to one. The first time I'm going to do use real money, I'd probably just really focus on one. And which one right now, I don't know. But for this particular type of trade, I'm liking these high dollar amount stocks more. One reason why is the amount of capital I'm bringing in. I'm bringing in about 2,000 bucks right there. I think Microsoft might have been another good one. Yep, a little bit less than 2,000. Netflix brought in 26. Tesla, a little less than 2,000. What the heck was I doing here? Maybe I sold. Looks like I sold a credit spread here that for January 2022, and for whatever reason I can't remember why exactly I did that, but nonetheless, let's move on with it. All right, so that's the update at that. Remember, you can go back at 2 minutes and 5 seconds and click that link and watch that beginning video that talks about it. Okay, we went over that. Bonds, we got the 13-week down 0.60%, 5-year down 0.57%, 10-year down 0.40%, and 30-year down up 0.32%, with a little bit of an inversion over here at the 13-week. And 13-week, getting the most money to lend for the shortest amount of time. You know, and some macroeconomics stuff that you might listen to that talk about, oh, the yield curve's inverted, but you know, these yield curves have been inverted for months now, and you know, the sky hasn't fallen down. But you know, for all this talk of maybe we're going to be in a recession, blah blah blah. You know, for me personally, there's no maybe. I think we're already in one myself. I don't need a fancy haircut, nice white teeth, and an expensive suit to come on TV to let me know when the economy has slowed down. I can kind of just look around and tell. I can figure these things out on my own. And I bet if you gave yourself permission to figure it out on your own, you probably could too. Now, a couple weeks ago, these rates were all pushing this 52-week high range. So we see the kind of like, seems to be this one is moving down the fastest, right? Just kind of in that area. I don't really know what that how you could implement that type of information, other than for some reason right now, well, I'll try to figure it out. You can try to figure it out, and if you do figure it out, let me know. Let me know where I'm slipping or where I can improve, and I'll try to do the same for you. But seems like the further out they go, the faster they're coming down for whatever reason. Let's get into looking at these stocks, since it's a Friday night and I want to get out of here. All right, we got the S&P 500 barely moved today on this low volume and didn't even touch the 200-day moving average. Real low volume. Like I said, it's only half a day. Technology sector, same thing, but fell back a little bit. So we're really, technology is really just in this range. You kind of see it the last like week or 2 weeks or whatever, right in this range. And right now it's just falling back into that range. Super low volume. Healthcare. This has been a sector to be in for a while. I would say that this has turned out to be the new leader. It's on top of all three of its moving averages that we see here. And that's a fairly strong candle, even though it's not pushing all the way to the top. Pretty darn close. So it's I would say maybe, you know, if we see a pullback down to in this range, you could do a paper trade and do a buy paper trade to see if it's going to bounce back. Don't do it with real money. I've never tested that out before. I have no idea if that's going to work. I don't know. Only experiment with the paper trade on that one. Financials. Okay, financials, it's been, you can see overall it's been going up, but not as strong as the healthcare. See, we had a pullback, right? Pull back to a little bit above that 200-day moving average, and it kind of shot up from there. You could do your paper trade account and test that. If it pulls back into this area, see what happens, especially if it pulls back to this 200-day moving average. But stochastic is looking strong. Just because it's getting up here to the top doesn't mean it can't go sideways up on the top for a little while. Or it could come down. All right, with consumer discretionary. We see consumer discretionary is kind of doing the opposite of some of those other stocks. It's just been still in this downward trend. Overall, though, for the last, let's say, 2 weeks, kind of going sideways here in this range from about here to here. You see those lines, and it's really been in here. This might have been a good candidate for some selling some options. Possibly, I don't know. I've never checked out the premiums. I haven't paper traded this to experiment with it. But as far as the pattern that's going on, seems like it could be a good candidate for iron condor, or just you know, selling calls on call spreads, whatever. Excuse me, credit spreads on either side of it, whatever the case may be. But hey, get out your handy dandy paper trading account and test those things out. Industrials. Now, industrials has been another one that's just making its way up to the top. It's not screaming up as fast as healthcare. I don't even know if healthcare is really screaming up, but compared to everything else, it is. Nonetheless, healthcare is just moving up. We see it kind of, you know, has these little pullbacks, goes up, little pullback, goes up. You know, buy the dip is not always the best thing to be doing. In some cases, you know, when the trend is your friend, it might be a good thing to be doing. Kind of depends on what your trading style is, right? My trading style isn't so much buy the dip. My trading style is sell some put options. Sell some put options. And if I was selling put options, I might, depending on how aggressive I was, this would be the first place I'd be looking to sell them, right under here. I'd also be looking somewhere maybe under this 200-day moving average. That's probably the first place I look. I'd probably look at those two places first. IWM. Okay, we do see overall it's been going up, right? You can see that it's up, but it's a lot more volatile. It's going up in a lot more choppy motion than like the healthcare sector is. A lot of pullback, go up, pullback, and sometimes, you know, these real volatile stocks can be pretty good on the option premium, but you got to check those things out. We got that double bottom right here, and after that double bottom, you see it made a little W, started making its way up to the top. Maybe we got a case for a W there. You can always change your chart over to a line chart, see if you got, oh, look at that crappy W, but you can look for those little W's, and or the M, you know, here's the M, boop, and got this double top, fell to the bottom. Usually when it's a really strong trend, though, it's going to be, if it's going up and it's strong, then the right hand side of the W is going to be higher than the left hand side, like you would see right here. And with this type of strategy, if you're doing a line chart strategy, You see it make this initial V, you see it pull back here, you see it start going up, you see that your right hand side is higher than the left hand side, and then when you see it past this, that would be the time generally that you'd buy if you're working that line chart strategy. I don't really work that myself. And I'm an option seller through and through. What I would do, like let's say we look at the Qs, right? Kind of see this little W pattern here. Qs, same thing. This has been, you know, overall, it's kind of just been going sideways, right? It went down. Here's where we are today. Look to the left. We're right back there. This is where we were like back in September, the middle of September. So hasn't been going too much up to the top. But if I needed to trade the Qs for some reason, right now, I probably would be, you know, I don't know if I'd really want to be buying it, so maybe I'd be looking at potentially maybe some naked. Okay, not even if I don't want to buy it, you know, I just always feel comfortable doing cash secured. Even if I don't want to buy it, I'll close it out. Or, you know, maybe a credit spread. But let's forget about what stock it is. Let's forget about the dollar price. Let's just look at the pattern here. Let's pretend this is a stock that you want to buy. It's good, fundamentally sound stock, gives you a great dividend. Everything's great about it, and this is just a pattern it's been giving you. So we see we got a low here. This is a little bit of a higher low, but I'm looking at this more of like a bottom in this area, in this range, bottom in this range. Okay, so maybe I'd be selling something out here, either cash secured, naked, some sort of spread, and looks like we got looking to the left here. Looks like we got some strong resistance in this area. Now here and here, but it's moved up a bit, right? Maybe up here. Maybe I'll look at selling something. If I really wanted to get away from it, far away from the money, go over this 200-day moving average. This one, you know, sideways, maybe it's good candidate for some income trades. Dollar, okay, dollar seems to be making this base right here. Is it going to make a little W? Change that to that. Oop. All right, not too much of a W like that. But see, it kind of looks more like a W in there, you know. But you know, and W is in the eye of the beholder, maybe. No, I don't think so. It's all probabilities, right? You're just trying to figure out what those probabilities are. So we got a bit of this bottom in this area. And you look over to the left, we see it's touched down here before, and granted, it's on the top. What seems to be resistance now seemed to be support then, but it's still showing that there's this range that prices get stuck in here. And but the dollar, you know, me personally, I don't trade the dollar. I'll look at the dollar as an indicator for what, I don't know. It seems like when the dollar goes down, other assets go up. When the dollar goes up, other assets go down. Why is that correlated? Maybe it's because, you know, if it takes more dollars to buy an asset, right? Or if it takes less dollars to buy an asset, if you got a strong dollar, if your dollar's all the way up here, then generally your purchasing power is higher. So, you know, if you want a high, if you're making, let's say, $5,000 a month, and you want that $5,000 a month to go far, then you'd want a strong dollar. So the price of things, you know, you get more for how many dollars you're spending. But right now, the dollar's falling down here, and there's more to the story than just like, okay, hey, you live in whatever state, I live in whatever state, you make this much money, you know, and there's more to it. There's way more to it, because the dollar is a world reserve currency. There's all these other countries involved with it. There's probably, I would if I had to bet, which I don't, but if I had to bet on how many politicians really give two bloops about you and I would say it's zero. That'd be my thing. You know, maybe some of them kind of care, but I don't think they care enough. They got their own political agenda going on. So nonetheless, this is what the dollar's doing, and you can kind of just watch the dollar and say, hey, the dollar going down. Let me see if these other things are going up. Dollar strong. You know, so that way, sometimes you know, is it really the stocks crashing? You know, what if the dollar's just zooming up strong and you take advantage of that and you buy some good quality assets? Not because, and they're cheap, not because there's something wrong with those companies, but because your dollar is stronger, right? And if you live outside of the U.S., you know, find an index that tracks your particular currency that's running your country, and go from there. 20-year bonds, TLT. So just as a rule of thumb that's kind of been working lately is that when TLT is going down, the stock market's going down. When TLT is going up, the stock market's going up. Just the kind of rule of thumb. You know, sometimes these rule of thumbs, they work for a little while, then they change. So right now it seems to be working. TLT is going up, so it seems like the stock market's going up. Dollar's going down, seems like the stock market's going up. So it seems to be kind of rule of thumb working, and that's what we're seeing here on the line chart, right? We're still outside of this top channel of that bear channel, and is it making a little W right here? That's what it looks like, right? We're talking about the W. Here it comes down, right? Here's your left hand point, goes up right here. Right hand point is definitely higher than your left hand point. Now we want to see, is the S&P 500 going to get over that? I would say break out of this, not that 400, 660. I'd say let's really see it get above 407. We want to see it get above 407, and then it's got to clear this kind of congestion right in here, 407 to 410, somewhere in there. The next is going to be around like that 427, 430 in that area, and in a relatively short amount of time, if we see it going over that, that's a very good bullish sign. However, you want to keep in mind that we just finished up with one holiday. We're moving into Christmas. We're moving into the new year. So it's not the same amount of trading volume is when we're not in holidays. And when there's not a lot of trading volume, bigger players can manipulate things more to the upside, to the downside, you know, whatever the case may be. Why would they manipulate it? Who knows? They have some agenda on it. Who is they? It could be hedge fund people. It could be presidents working. What is a plunger team called? Plunge protection team, plunger team. Yeah, plunge protection team. What is it called? The president's, where'd it go? The working group on the financial markets. President's working group on the financial markets. This was something that came into play, I think it was 1987. Here we go. Right? President Reagan back in 1987 put this together. So since then, there has been a team of people that go ahead and, you know, read here in Investopedia, wherever you feel like reading, but a team of people that are able to, you know, for whatever you want to call it, massage the stock market, manipulate the stock market, rig the stock market. You put whatever adverb, is it an adjective? I don't know what it is, but you put whatever word you want to put in there. But they can influence the price, whether that's a good thing or a bad thing. I'm not debating that. I'm just saying it's there. And when there's a lot of light volume, whether it's the plunge team, whether it's hedge funds, whether it's whoever, for whatever, it's just easier for them to move things around. Now, if you had a short position and you had the capital to move it, why wouldn't you do it? Why wouldn't you influence the market to make more money? I bet you would. You can leave in the comment if you just really think that there's no way you would do it. But and we all probably would. TLT, we already looked at that. Oh, okay, we're over here. All right, so what do we think is going to happen? I don't know, 100% know. I mean, right now it's out of this channel. Seems like it's going to keep going up. There's also something about people, CEOs getting bonuses and stuff. So end of the year bonuses. I think they like to have the stock prices go up, and things like that. Something about stock options. I forget. I'm used to listening to the stuff. I'm not as good as explaining it. But nonetheless, there's a reason why there's a term called Santa Claus rally. We might be heading into this. Looks like we're heading into the Santa Claus rally. So maybe the market's going to keep moving up. So we want to see what's going to happen around 407, 408, 409, and then from there, let's say 428 to 430. Now, if it starts going to the downside, we want to see one of the first things is going to be around kind of in the 380 range. And then after that, we're looking at 380, 380s, 376, and then you're getting down to about this 357. Is that in there? Yep, 357. So if it's staying above or breaking those are some areas that seems to be going to give it support if it's on one side, resistance on the other. Now oil, wow, look at this, man. Oil, I was thinking oil is going to get up here a little bit faster, but oil is basically retesting the $76 area. Now this huge sell-off candle here, and look at this. This is a really this is a bearish sign when prices trade all the way up to 80, but selling pressure just pushes this down. So right now we're catching the support right around the $76, $75 area. If you can paper trade, selling options on crude oil futures, which if you cannot paper trade it, I would not suggest doing this in real life because you can lose a lot of money super fast. Oil futures are leveraged, I think, 1,000 to 1. So if this moves 1 penny, your position moves $10 for you or against you. If it moves 50 cents, you made $500 or you lost $500. If it moves $1, you made 1,000 or you lost 1,000. If you don't know what you're doing, you're probably going to lose a lot of money real fast. But if you can paper trade, as this rallies up, be watching this. Maybe you watch it on I don't know, watch it on whatever chart you want to watch it on. If you feel like watching it on a 15-minute chart, you watch it on a 15-minute chart. Watch it on an hourly chart. Whatever. I don't care. You do whatever you want. But when it rallies up, when it gets around here to this like 82 or so, maybe boom, maybe sell yourself some out of the money. See if you can get some premium for like a $100 strike price, something like that. But sell it when it's on an up day. Just paper trade it though. All right, gold. Gold pulled back. Now it's kind of rallying up. It just really seems to be, look at this. Here, this line right there. Now, right, when it's on the bottom side of this, it's acting as the resistance. It broke through that resistance. Now it's acting as support. I listened to something this weekend. I guess the weekend's just starting today, but I listened to something. I don't know if it was yesterday or today. I listened to it a second time today, but this guy, I don't really believe what he was saying, but I wanted to listen to it a second time. I don't believe what he was saying in context of everything he was saying. And one thing I don't believe, but I wish it were to be true, he was saying that the powers that be, want to rig gold so it drops down to 700. Man, if you've been watching these videos for a while, I've been asking, please, let me buy some gold at 600. Hey, 700, I'd be happy to. I'm backing up the truck. Gold drops down to $700 to every available dime I have, every available penny I have. I'm gonna be buying as much as I can. Physical, GOLD, but don't tell anybody. All right, Bitcoin. Bitcoin is doing the same thing. Like this is what it does nowadays. Sometimes it goes sideways for a long time. Look at this. It went sideways for a long time, kind of rallied up, dropped down here. Right? It's like just repeating this pattern of to the downside. I saw, I don't know if it was on Kitco or Stansberry, some guys talking about Bitcoin is going to 10x after or whatever. Well, I don't know what he said, and I don't really feel like listening to that right now. But I do know this: if Bitcoin cannot get above the 20-day moving average, if it can't get above the 20-day moving average, then it's not going to 10x, because this 20-day moving average, look at that, that's sharply moving down. If it can't get above that, then Bitcoin is just going to be moving down. You want to be a little more like look at it closely. Put a 9-day moving average on it. Whatever you want to put on it. How about this? This is like a intermediate, time frame. 50-day moving average right here. If Bitcoin cannot get above the 50-day moving average, it's not 10xing. It's that simple. I don't care what happens. Like if it's going to 10x, then that means it's got to break above this 50-day moving average. So I don't know what your lifestyle is. I don't know, what's going on with you, but I know what's going on with me. I live in Hawaii, and in the land that used to be free, called the United States of America, which I don't think is free anymore, because for the simple fact that I'm not able to legally trade this stuff very easily. Like I can't trade it in this Tastyworks account. I can't trade it in this. And if you were to tell me, hey, you can get some, cryptocurrency exchange, man, those things are going bankrupt left and right. So, living in the land that used to be free, aka state of Hawaii, I'm not able to trade it, but maybe you are. And if I were you, what I would not be doing is I wouldn't be hodling. I would not be hodling this stuff. I'd be learning how to go short in cases. Now, I'm not saying it's going to keep going short, but look, if it stays below these 3 moving averages, it doesn't really have a choice, right? If it's going to go up, it's got to get above the 20-day moving average, and it's got to stay above the 20-day moving average. That's just how it is. There's that's the reality of life. And like Phil Grande, I learned from Phil Grande a long time ago. Lose your opinion so you don't lose your money, right? It's not an opinion whether this is above or below the 20-day moving average. It's a fact. And no matter what your opinion is, if it doesn't move above the 20-day moving average, it ain't going 10x, ain't going to 500,000, ain't going to 1 million if it can't stay above 17,000. So the longer it stays below 17,000, then we just got more of a chance of crumbling down. But I think, over here, we're looking at that same thing, but it got above this 20,000. It stayed above 20,000 for a little while, even broke above this 21,000. It came crashing down. So even if we see it get above 17, get above 18, we got to see it stay above, right? Because look, over here, it was below that 20-day moving average. It got above both the 20 and the 50, but it couldn't stay above. So, hey, do with it what you want. But if you live in a state that gives you enough freedom that you can trade this without risking your money on some wackadoodle cryptocurrency exchange, then consider trading the charts and not trading narratives from some slick people off from YouTube. And what do we got next? I guess all we're gonna round this up with is paper trade. Paper trade. If you're gonna paper trade Bitcoin, you're gonna paper trade stocks, you're gonna paper trade Forex, whatever. But I would suggest paper trading stocks. You know why? The reason why I would suggest that is that they're relatively easy. Don't misconstrue what I'm saying here. You can lose money. You can lose a lot of money trading stocks, investing in stocks. But like, for example, if you are not using margin, now you can have a margin account, but not use margin. Let's say you got $1,000 in your account, and it's a margin account, and you buy $1,000 worth of stock. You had $1,000 of cash. You bought you traded that $1,000 of cash for $1,000 of stock. If the stock, let's say you bought 100 shares at $10. If the stock goes down to $5, your broker is not going to call you and ask you for more money, right? Because you're not trading on margin. You're not borrowing money. You bought the stock with money that you have. And even what's even better is that you can sell put options to buy the stock at $10. So let's say the stock is, you want to buy it at 10. So you sell a put option at 10. Maybe you take in 25 bucks. So you really got your stock for a little less than 10. $1,000 minus 25 is what you bought it for. Or you can do a lot of different things. You want to learn more about that stuff, go to ihavesuccess.com, download this one, download this, download the Greeks, watch other videos that I have here. I think the easiest way to start trading, start getting used to trading, doesn't mean the only thing to do, but in the beginning, I think the easiest kind of hardest way to lose money is to be selling cash secured put options on stocks that you don't mind owning the rest of your life, right? At least stocks you can look at some fundamental stuff. With Bitcoin, there's no earnings. What can you look at? With stocks, you can look at a sector. There's all these stocks in the healthcare sector. You can look at the PE ratio between all these stocks in the healthcare sector. You can look at the dividends of all these stocks in the healthcare sector. Or you can look at whatever sector you might like. But there's ways to compare things. There's a lot of structure that's already been set in place. And if you're just starting, why would you want to lose money? Why wouldn't you want to put yourself in a position where you give yourself the greatest opportunity to make money? Maybe you're not going to make a lot of money, but you know, Warren Buffett says rule number one is don't lose money. So why not give yourself the best chance of keeping your money? Learn to sell cash secured put options, start in a paper trading account. Once you get used to that, you're familiar with things, you can pick out a good stock, things like that. If you're ready, talk to your financial advisor, see if you're ready to to do it in real life, and then you can be doing it in real life. And then from there you can start paper trading some other type of strategy. Or you might find that your lifestyle is just suited really well for selling cash secured put options on stocks you don't mind owning the rest of your life, and maybe you want to stick with that. I don't know. You gotta play with it, but paper trade, see what works for you. It's not a one size fits all thing. No matter what these twerbs, tweeps, dwerbs, I don't know, whatever derogatory name I can say to these gurus that say they got one simple 3 checklist thing that's going to make you a millionaire in 45 seconds, or whatever the case may be. The stock market is really dynamic, and there's lots and lots of different ways to trade. There's not one right way. The right way is the way that makes money and it fits into your lifestyle and you keep doing it, right? If you make money but you don't keep doing it, then that's not the right way. You want to be active in the stock market, you got to find something that fits into your lifestyle. For example, I mentioned I live in the used to be free state of Hawaii, and for me, the stock market opens around like 3:30, 4:30 in the morning. I used to wake up 3:30, 4:30 in the morning to day trade. That did not fit into my lifestyle. I need some sleep. That was not enough sleep. And somebody wants, if you, for some reason, if you feel like you know my health better than I do, and you're going to tell me, hey, you only need X amount of hours of sleep. You know what? Go eat some soap, because everybody's different, right? Everybody's different. How can you tell me how much sleep I need? I tell you how much sleep I need. And the same for you. I don't tell you how much sleep you need. You tell me how much sleep you need. I don't tell you what's the best strategy for you to be trading. You learn different strategies. You see what your lifestyle is like. You see what works for you, and you do what works for you. Don't listen to these numbskulls telling you that they got the answers, like they got some divine conversation from the Almighty, and the Almighty's giving them the secret to the stock market that they're going to sell you for $49.99 and turn you into a millionaire. Give me a break. You guys have a fantastic day. I know I had a fantastic day today, and hope you don't mind me being candid with you. If you do, this is not the channel for you, because that's my real personality right there. You guys have a fantastic day. Bye-bye.